Welcome to today's market report.
European equities ended flat on Friday as a jump in major financial stocks, driven by surging bond yields, offset weakness in high dividend yielding sectors and commodity companies reeling from a slide in oil and metal prices. The Pan-European Stock 600 index closed 0.1% higher, but it notched a gain of 4.6% in October, marking its best month in 7 and recouping all of September's losses as strong third-quarter earnings reports drew in investors. Insurance stocks were the best performers for the day, rising 0.8%. Reinsurance firm Swiss Re was the top gainer in the sector, rising 3.4% on strong 9-month results. Banks and other financial stocks were also boosted by rising southern European government bond yields as bets that the European Central Bank would tighten policy by mid-2022. While the bank maintained the status quo on Thursday, investors expect rising inflation to change its tone by as soon as December. Dividend-linked sectors such as utilities and real estate were the worst performers as rising yields made their future earnings appear less attractive. We're going to keep seeing this two-way price action in the markets, driven by a clash between strong earnings and optimism over the economic outlook, contrasting with risks of high inflation, interest rates, and energy prices, according to Oanda. But utilities were still the best performing Eurozone sector in October, rising more than 8% as investors bet on an eventual recovery in economic activity. Data showed French and Italian economies growing faster than expected in the third quarter, while supply shortages held back German output. Major mining and energy stocks closed lower as oil prices fell from recent peaks and concerns over Chinese demand dented base metal and iron ore prices. Among other stocks, premium German car maker Daimler added 2.3% after posting a higher quarterly profit, despite a 30% drop in Mercedes-Benz sales due to the chip crisis. Luxury eyewear brand EssilorLuxottica advanced 3.5% after raising its 2021 outlook and saying sales continued to rise above pre-pandemic levels in the third quarter. Crude oil WTI was up 0.57% at $83.28 per barrel. Brent oil was up 0.08% at $83.73 per barrel. Gold futures was down 1% at $1,784.55 per ounce. On the FX front, the British pound is attempting to find support at 136.65 after plummeting more than 0.7% on the day. End-of-month moves with November's Federal Reserve meeting around the corner have boosted the US dollar across the board. The GBPUSD has dropped sharply on Friday, weighed by broad-based US dollar strength in the combination of a moderate risk aversion and higher expectations of a hawkish turn by the Fed next week. US macroeconomic data might have encouraged investors to close US dollar shorts, especially after the core personal consumption expenditures. The Fed's preferred inflation gauge accelerated 3.6% year-on-year in September. These figures reaffirmed the idea that the central bank will be forced to accelerate its monetary normalization plan, which has favored the US dollar. Higher inflation expectations have also pushed the US Treasury bond yields higher, which has increased bullish traction on the US dollar. All in all, the investors are bracing for an event for next week, with the meetings of both the Bank of England and Fed scheduled. The Fed is expected to announce the end of its monetary stimulus, while, according to some market sources, the Bank of England might hike interest rates for the first time in 3 years in order to tackle inflation pressures. The MUFG Bank considers that the BOE could hike rates by 0.15% next week, although they warned about a negative GBP reaction. Based on the recent FX response to central bank guidance, we would well see GBP dismissing the guidance of slower tightening going forward. The bank also expects the GBP to ultimately weaken on the back of a 15 basis point hike, and guidance suggesting the need for less tightening than what is currently priced. That message may not be explicit, but should be implied by the MPR forecasts. The euro also plummeted 1% at 1.1535, weighed by the strong dollar, which is trading at 94.13.
This is today's market news. Thanks for listening. We'll see you next time.